Welcome to the Foundation for the Study of Cycles. Welcome to our weekly Cycles TV. Today is Monday. We are joined here for some cycle analysis. Today I've prepared two topics. We will have a look at the cycles on the dollar index, and we will have a cross-check on current cycles activities in Bitcoin versus the US dollar on the crypto markets. These are the two topics for today. We are live, so I'm happy to have a look at your questions at the end of the session. So please feel free to drop me your comments and questions as always in the chat section so that we can also discuss your topics. That's it for today. If you're new to this channel, what we're doing here, we do education on how to apply cycle analysis. That's important always to say upfront, as we are the foundation for the study of cycles. We want to make cycle analysis as easy as possible, and we want to spread the knowledge and the education on cycle analysis. Therefore, this is not a trading or forecasting service. We just use current market data to apply techniques on cycle analysis. So that's the normal disclaimer. Please consult your financial advisor if you want to do any follow-up decision making based on the education and cycle analysis we are doing here. So I see your comment. If we have time, I will also have a look at gold. We will check how long we run. But that's at least, let's start it for today, and then I will get back to your requests. So let's start with the US dollar index. I mentioned this 2 weeks ago, and I had not the time to do the cycle analysis on the US dollar index last week. I need to excuse for that. So therefore, I will make it today together with you. So let's start and get into it. Therefore, we will open our cycle analysis workbook, and I will walk you through the process of how to apply cycle analysis. If you are new to this topic, if you're just interested to get a clue on the cycles, that's then the topics for the next 10 to 15 minutes. So I will pull up the dollar index. Just organize my screen here. Let's clear up current cycles, and let's start with the, I'm just organizing my screen here a little bit. Let's start with the long-term weekly perspective. That's what I would always recommend if you are analyzing a new asset or an asset which you're not familiar with. Always start with a longer-term view and the longer-term cycles. So therefore, I have pulled up the US dollar index from which is provided by Yahoo Finance. That's the ID which I'm using. So if you want to repeat this procedure, that's the ID where you can grab this data from the weekly time frame. This pulls up then the dollar index here on the chart. That's where we are today. So I have loaded lots of data here going back into the year of 2000. So we have over 20 years of data. I will start, as I always recommend to start with, a length of around 800 bars, which I'm using here now to start the procedure, because that was around these 800 to 900 bars, which means that we are able to detect a cycle length up to 300 or 400 bars or data points, which in this case measured in weeks, which is a current snapshot. So we could use, and I will do this in a second, add more historical data to the cycle analysis. But in general, it would not give you more clue to what currently happens on the market. So therefore, you always need to decide first which period you use for your cycle analysis, and you need to decide between two procedures. One procedure, use the current past and limit it to the range you normally would need. And that's the longest cycle you want to detect multiplied by a factor of 3, which then if this analyzer deals with cycle lengths of around 300, multiplied by 3 and you get to 800, 900 data points, which is enough to detect the current cycles. If you want a more historical view on averaging cycles in the past, then add more data, but then you just average cycles which have been working in the past, which might not be so clear on projecting into the future. So that's the first decision you need to make as a cycle analyst. I start with the current time frame here. So then the first step is to look at the cycle spectrum, which is shown here at the bottom of this chart. This cycle spectrum shows us the most, or all peaks are related to one cycle length in the overall data set. So we are looking for possible peaks in the spectrum here, which are shown, and it's analyzing all possible cycles which could be there, and the peaks which stand out in the spectrum, so which are sharp and very shooting to the sky of the spectrum. These are the cycles we want to select, or which are dominant, which are in the data set very prominent. And we could select these cycles first as a starting point to start our cycle analysis. And in this spectrum analysis, we can clearly see two cycles which fulfill this criteria. There's one cycle here with a length of 173 weeks, which forms a clear peak in the spectrum here. And the other cycle with a length of 85 weeks, which is very interesting here, by the way. Because this is just an harmonic of this longer term cycle. So if you multiply the cycle length with a length of 85 by a factor of 2, you will exactly get to the cycle length with a length of 173. So therefore, it's also an interesting result here we see currently with this cycle analysis, because in the end, we have one key driver in regards to cycles, where we see two harmonic relations between, or one harmonic relations between these two cycles. So let's get deeper by selecting these two cycles here for our analysis. Therefore, we can also see the same cycles here in the list. So it's just the mathematical listing of these cycles, but I would first always recommend start with the visual inspection of the spectrum analysis, because there are several characteristics which you might overlook if you just have a look at the table view. So, for example, if you just have a very flat peak, then you might not see it in the table view for this cycle here. But these two peaks are as we want to see it. So let's start with the longer term cycle, the 173 weeks, which I have selected here now first. And then I recommend to get familiar with this cycle and to get an understanding how the cycle behaved in the past. I would recommend do a quick cross-check in regards to the detection of past turning points. I'm sure you know about this if you are following this channel here, but the cycle analysis we're doing here and the turns which are shown and projected here on the chart are made in their relation to timing. We don't use the cycles here in this sense to make predictions on absolute price swings or price targets. The swings which are shown here just represent points in time where this cycle expects the price to change direction. And it's no indication about the absolute amplitude of the next swing. So therefore, often it helps, let me just enlarge this here, just to do a kind of cross-check visually if the trend changes have been detected here by the points where the cycle turned, and in regards to where the real price turns. So here's the low in the cycle, here's the low in the dollar index, while here's the top, which can be then connected to this top here, which is then here the low in the dollar index and the cycle. Then we have the next top here, which is either here more a little bit to the left or to the right, but in the end it doesn't matter. We could use these two peaks here. Then the low here with this cycle, and I'm just connecting now the real price turns in relation to their timing from the cycle projection here. Again, we have one peak to the left, one peak to the right. That's also an indication that shorter term cycles are also at work here, but we could also use this point here in regards to the overall trend shift. It would work, or it would not matter if we select this top here, or that top here. So we have three possible tops here, which are in this range of a possible top. And here it's clear low here at this point in time. So then connecting this top here to this cyclic point here. And you just see, and I just recommend this if you are new to this kind of analysis, that you make yourself comfortable with the way how these turning points are predicted in regards to their timing and how good their timing indication was in regards to trend reversals from the data set you're analyzing here. And as we can see here, for the last 15 years, the weekly cycle with a length of 173 weeks, in this case, gave us a very good indication of past major trend shifts. So therefore, that's also the reason why this peak has been stood out in the spectrum, because there's clearly one cycle which seems to relate or to vibrate to the current market environment, or the other way around. So the dollar index is vibrating to this cycle of 173 weeks. Before we have a look at the current outlook from this longer term cycle, we could also add the second, or the second harmonic of this cycle, which is half of the cycle length, or exactly a length of 85 weeks. So we could add this to the composite here by just activating it on top of the longer term cycle to see the phase is a little bit different. So you see the phase is not the same. Otherwise, it would just amplify the peaks and the bottoms. So we have a current different phase here. We could now zoom in to closer analyze the behavior of these swings here if we go into the past. And as I've told you before, we've seen that the longer term cycle was very perfect valid, but we have seen some tops to the left and to the right to the longer term cycle, which could not have been explained just by using one cycle. But if we now have a look, if we add the second harmonic of this longer term cycle, you see exactly what is happening here. And I will now zoom in into different areas here where you now can see that this cycle now helps us to explain this kind of double top we have seen previous, or before it was just this one cycle here, where now this shorter term cycle also can very good explain these double top formations here, which we see here or even here, or we can also plot this for example here down below. It's too small now from the amplitude here, and we can now scroll through the chart. We see the same situation here in regards to timing, so that the cycle with the length of 85 has been nicely in sync here with this double top here again, and therefore we can then again scroll through this data set from this long-term cycle here. Here it was not as seen as far, but the other two tops, it doesn't matter how long we go into the past. So also the shorter term cycle, which is standing out in the spectrum, seems to be valid in line with the market shifts we have seen in the dollar index from the long-term perspective. So that's the starting point. And by doing that, we can now derive a long-term outlook in the dollar index here based on the current view which we are seeing here. So just using the weekly analysis, we are now in the period where we would expect this kind of zigzag move or double top formation, which we have seen in the past through the next 10 to 12 months from a weekly perspective. So without knowing the amplitude or the force of the moves, we could see, or right now we should see downward pressure into the summer or late summer period, and then upward pressure into early next year, while then really there's a big swing taking place starting summer, maybe early next year for the US dollar index. You can see the same results if you have a look at the composite cycle energy, which indicates a very strong negative peak here in starting in summer next year here, while currently, and this is the double top where we have a mixture of negative and positive cyclic forces pulling on the dollar index here. So interesting would be the point here when this negative energy is coming from the cycles into the US dollar index. That's the long-term perspective. So what we then always do or should do is let's now move to the next lower time frame, which we use now the daily data set. So the daily data set of the US dollar is looking like this. I've just loaded the daily data. This is the ID here in the upper right corner. So you can repeat this analysis by pulling up this data set on your end or in the browser on your end. So let's do the same procedure. By the way, a good first indication is, without any look to the spectrum or any other topic, just have a look at the color, which is indicated by the lengths of all possible cycles which could be used here based on the signal detection. Almost all cycles have a red background, and red background is when I'm talking about this list here. So the background color of each individual cycle length gives us an indication about the current phase, the current phase of each cycle. So it's not a score, it's just showing the phase indication. So red means each individual cycle here is in its downswing cycle. That's why it's colored red. A green background color for an individual cycle would mean there is in its upswing phase this cycle. There's just one cycle which is currently in its upswing here. All other cycles are pointing down. So even though it would not matter which cycle we would select now for projection, because anyhow right now almost all are pointing down, which is an interesting juncture at this point. So in general, maybe there's no need to go into the details yet. So let's just have a look at the only cycle which is still pointing up, and you can clearly see it's only pointing up for some days once this cycle is also rolling over to the negative side. By the way, you can do this if you hover in the cycle analyzer. If you hover with the mouse over some point on the time axis here, you will see how the color automatically shifts in the list of the cycles. So if I move into the future here, just on the time axis, you will see that also now the color of the green cycle, which is active here, has changed. I will just indicate that you can maybe follow this here. So just take a look at this highlighted area here. Once I'm hovering now on the time axis, you see how this cycle phase is changing. So you see that by just moving some days into the future, this cycle is also rolling into negative territory. So latest by end of next week, also this cycle has been rolled over to the negative camp in that case. So that's just in regards to education. That's just a quick view without digging into the details of the results of the cycle analysis. Let's deselect the cycle for a second here. And now let's have a look at the daily spectrum for this analysis. But overall, you see that I've selected a very long period here. And now to repeat what I always recommend first, let's shorten the amount of selected data to around 800, 900 data points or days here. So therefore, I will move the start of the analysis to start a little bit later, that we have the set of around 900 bars. We have a swing here. If you want to fine tune it a little bit, I would then recommend choose a key top or low in the market where you start your analysis. So if you don't know, just use the multiply it by 3, the longest cycle you want to detect. if we see this major low here in the data set, I would select this as a starting point for the cycle analysis. And we have 100, 150 bars more than the mathematical way, but this gives you better swings for the detrended cycle analysis here. So that's the starting point. Similar situation, so the overall phase analysis or phasing analysis of all cycles has not changed. They are all bearish. And we can also then now go to the spectrum, and you see now, while shorting a little bit the amount of data we analyze, we see clearer peaks related to the current behavior. And that's what we're interested in regards to forecasting or projection of the cycles. We are interested in what's currently happening in the markets and not what has happened over 50 years or thousands of data points here. We are not interested on average cycles here. So we have 2 to 3 cycles which I would recommend for the cycle analysis. These 3 peaks here, it's the starting point. So let's see where we are. We have 100, 112 and 141. That's the starting point for our cycle analysis, 100, 112 and 141. By the way, these are exactly the 3 cycles here on top of the list. We do then what I always recommend. So just to repeat our standard procedure here, let's zoom in and let's cross-check the valid detection of important changes in trend on the main data set. So let's start here with the low, the top, the low, the top. So like drawing a zigzag line in regards to where the points are. So they are not quite perfect here. So there was a top forming here, but then this low is again almost perfect. This top is almost perfect here. This low here is almost perfect. This topping period here is very perfect here. So here then this low is also perfect in regards to relative timing, because then we had this upswing here into this point in time, and then this low is also almost perfect here. So I would say these 3 cycles help us explaining past behavior. We don't know if this will be a perfect projection into the future, but at least for the last 4 years, for the length of interest to derive the cycles, these 3 cycles fit perfectly into what we are looking for. So we can even continue it here. So I think I've not completed the overall analysis. I will just quickly continue that you get a clue on that. So, and then here, that's what I said. So maybe here from here to here, yeah, we would have expected the negative situation. What we could expect, and I will also explain that, we had a sideways movement, yeah, from here to here. Then the next strong up move until here, which is correlated to this cycle top here. Then there was a down projection here, which resulted then in, again, a sideways move. Yeah, so you can count this as just moving sideways in the market, and then the next heavy upswing here into this area. And to understand what happened in the last 2 cyclic down phases, which have been, here has a downswing phase, here we had the downswing phase. Both of these periods, which have been here and here, have not been resulting in a very heavy downtrend. So both periods have more pushed the dollar index into a sideways shift, which could give us a clue what to expect here, because the current cycle and this perfectly started here, so it looks like the cycle is working like a magnet now, is projecting a downswing into the summer here, so for the next weeks to continue. So the dollar index is from these 3 cycles projected to have a downswing into summer. And if you now still remember what I explained 2 to 3 weeks, 2 to 3 weeks, 2 to 3 minutes ago on the weekly dollar index analysis. You know that the longer term cycle is still, I can switch it here, is still now in this consolidation or topping formation here, and then only by beginning of next year the larger downswing is expected. So it's not as clear or as simple if we combine these two cycles, but the daily cycle outlook is really negative until summer, which is in alignment with the current downswing, which is also projected from the longer term cycles. Or to conclude it that way, until summer this year, the long-term cycle and the short-term cycle are pointing down from a daily and a weekly perspective. So there we have a clear alignment of cycles, long-term and short-term. So until August or maybe even September, October from the long-term perspective, but just counting the alignment of both cycles, this period is only going into July, late July. So in August, from the daily perspective, they are moving to the upward situation. So until mid-July, we have a negative cyclic outlook for the US dollar index. I think that's the takeaway from this analysis. I would not look too far into the future if we do this kind of analysis, because as you have seen, you need to revisit the daily cycles and the weekly cycles once we approach the months of July, to see maybe if shifts happen due to the principle of variation of cycles. So never take a static analysis. This was just a static analysis, static one-time analysis from today, and count every possible turn which the projection shows us into the future. We need to reassess the analysis if cycles have changed. So the takeaway from this session is here, and I hope you got the message. Long-term downwards into later this year, confirmed by daily cycles pointing down until July. Then we need to revisit the situation in the US dollar index. Okay, this was the first key point I wanted to, or I owed you, as I promised you to do this analysis. And I hope at least I tried to explain the principles, how to apply cycle analysis. So for me, it's also important that you understand the procedure, the routine, and the method, how to start, where to set your time frame, decide which data frame you use, have a quick look at the cycle phases, go to the spectrum, make a visual inspection about the peaks, then go again back to select the key cycles, which you have seen in the spectrum from the list, make a visual inspection of the turns from the past, and then go over to the future time frame and derive your conclusions from the cycle analysis. That's always the same procedure, and that's always the reason why we are here. And I want to give this education, or at least the understanding how to apply this analysis to you. Okay, so before we end, or before I get to some of your questions, I want to have a quick visit of cryptocurrency Bitcoin, as I promised in the beginning. So now let's switch to Bitcoin. That's the, sorry, I need to share my screen. That's the current price action in Bitcoin versus price in US dollar. And we did a wrong projection here. So which wrong or cycles have shifted here. And that's why it is important to revisit the status also for Bitcoin here. So therefore, I will just quickly go back into somewhere here into the period of February, January. So this point in time here. So where I did the last point. And there we had the cycle with a length of 200 something here. And we discussed here in February, March, that this could be possible. I'm just watching your comments here. First Kachel Gott, yes, this is what we missed last week. So nice that you're here today. Thank you for joining. I hope you enjoyed the US dollar forecast. And Photoshop Bab, I promised first go over Bitcoin. So never get me promising anything. I need to be careful. So if time permits or allows, I will have a view at gold. But first, I need to visit Bitcoin. So back to Bitcoin. That was the situation here in March, February, where we discussed expecting a cycle low in Bitcoin. And then afterwards, we know what happened. So we had, it looked like this cycle was on track. So as we started now then from this point to increase, until this point in time here, and then it failed totally at this point here. It reversed at this point here. We discussed here, so the initial projection was off for sure. It was wrong. I just want to highlight one observation, which I very, very often observe while doing this cycle analysis now for over 20 years. If cycles fail, they, I would say, almost always fail at the midpoint, which is exactly what happened again here for Bitcoin. So to clear it up, so the midpoint of the cycle is exactly here. Once we reach from a timing perspective, at the point in time where from a timing, so this is one quarter of the overall cycle length. And at these midpoints, that's the important point. Either when you see a push through and the projection or a confirmation of the cycle, or even it fails at this point in time, there's a different way of analyzing these points, which are also called future line of demarcation, which gives you an offset line. And this is exactly the same what happens if you shift it by this point in time, because if we would, at this point, we would have broken through the FLD price line, which is a confirmation of this cycle. If we fail at the midpoint, we don't have a confirmation for this cycle. So if you are willing to take a risk on cycle analysis, you don't wait for this confirmation. That's why you could take the earliest point here where the turn is expected to happen. If you are not willing to take this risk, because cycle analysis is always a leading analysis, you could wait until the midpoint of the cycle has been reached and is achieved, because then we had the confirmation of the cycle. But the Bitcoin cycle broke or failed exactly again at the midpoint of the cycle projection here. That's I'm just sharing the observation here that you can also get a clue on whenever you do a cycle analysis. So and now some other observations. If we always need to revisit when some cycle analysis has failed. So because we can learn from it, that's the important point, and that's why we are here. In the end, I don't care if cycle analysis is correct or not. At least we are doing here education and cycle research, and we always can and want learn from failures, because then we get better moving into the future here. So just upfront, one short comment here. I made a very long-term analysis on Bitcoin cycles, which always gave us a nominal cycle around 200 days. I'm sure you're aware of that. I will not repeat this here. That's also the reason why I counted this cycle here for valid at the point of the analysis. I will not count this as an inversion, which others might or could be the way to discuss here inversions, but that's not the topic I want to discuss here now. What happened in the spectrum is a very interesting observation, which I want to discuss with you, but that's very important now to learn from. This is how the spectrum looked like in February, March. And normally, without the historical knowledge about the nominal cycle of 200 days in Bitcoin, this is not how a good spectrum looks like. And the reason why I'm mentioning that it has a very flat peak, or there's no clear peak like this here in the spectrum. And these are the situations where you need to be very careful with using any peak from any spectrum here, because if you have these kind of very flat peaks, it means that something's not strange, but there's a shift in cycle and dominant cycles going on, because I would assume there is still this shorter term cycle at 200, and there's a new cycle forming at a larger period, which is not, or at least the data we have given the algorithm is not enough to differentiate between these two cycles here. So therefore, it has just resulted in this flat spectrum here, where two or from the amplitude a new longer term cycle, which is becoming more and more prominent, but we can't see it now, while the 200-day cycle is still there, but is maybe becoming less important moving into the future. It's just a comment on how to judge a spectrum. I made the mistake back in February, March. I overlooked this pure basic knowledge. I overlooked some of my own knowledge. But the reason for that, I counted the historical analysis, which told me that 200 days is always a very valid cycle before each individual upswing in the past. So therefore, I overlooked the spectrum and said, okay, 200-day cycle was always important in the past. It's also today. It was a mistake. And you should always stick to basic procedures, which I have not done at this point in time here. So, that's just one point. We can't clearly see at this point in time if the cycle length is here, or here. This situation just means we don't get a clear picture of which cycle lengths to use to do any prediction. And that was the mistake we did back in February, March. But we can now just add the current data to the analysis. And we will now see, and that's what I would have expected anyhow. Now from the flat peak, we see now the formation of a new peak forming up at a longer length. Yeah, it's still flat, so it's still not the nice peak we want to see in the spectrum. But if you see from the past how the spectrum has evolved over the last days, you see that there is a peak coming up, so a larger cycle now more prominent in the spectrum, while the 200-day cycle moving down. I try to explain this, that you get a feeling about why it's important to observe how the spectrum changes visually over time, because it gives you a clue about the principle of variation, which Hurst and almost all cycle researcher will tell you about. The evolving spectrum will give you a clue on how the cycles morph and evolve in your data set. Therefore, that's I think very, very important to understand once you look at this. So it looks like that the 200-day cycle is becoming less important, while a longer cycle at this point in time looks close to 300 days is becoming more important. The shorter time frame cycles here are still, if we just draw this offset line here, the amplitude is just too low to really use these shorter term cycles here and then this analysis. So that's the way how to look at the spectrum. And if we now move up here, again, an interesting point here is almost all cycles are currently in their upswing phase. And we have the 110 might be of importance here. I just bring this one up because this is an harmonic related cycle to the length of 200. Spectrum is pregnant. That's a good observation in regards to explain how a cycle spectrum looks like. So, Sergey, if you see a pregnant spectrum, you should not trust it for cycle analysis. That's maybe a takeaway from visual, or you can now draw image detection algorithm, which should look at the form of the spectrum. But that's correct. Exactly, that's correct. Let's be careful with these pregnant spectrums. But the 110 was just an harmonic related cycle to the length of 200. So this is how I would now start the analysis. So the most important is what seems like to currently happen. So the 200 days dominant cycle, it's morphing into a longer term period, which seems to get now into 280, 290, 200 something. We could add the harmonic of 200, so 110, but overall it would not give us a different conclusion. The key reading is still, and that's the point I would just want to make, I would not expect another crash or whatever in Bitcoin now. So from a cyclic perspective, it still looks like we are at an important bottoming cycle in the crypto and Bitcoin asset here. So maybe all the negative news or media news around the crypto assets is more or less just a sign that we are in a bottoming phase for cryptos. And what we see now are what's also often happening, that this was a kind of first cycle low here in February, March, where the 200-day cycle bottomed. And now this is more or less extending to the right. Maybe from a longer term perspective, this will just look like a sideways move since February if we now start to peak. I don't know. As said, disclaimer, this is just cycle analysis. This is no whatsoever forecast which you should follow in regards to your financial decision making. So therefore, that's what the cycles speak from a pure digital signal processing view. So it's always important to take this into consideration. But at least it's similar to, or the opposite, what we saw on the dollar index, where we had very negative bearish cycles now coming into play, even though it's unclear in the spectrum which cycles to use here in Bitcoin, which was different for the dollar index. For the dollar index, we had two clear peaks in the spectrum with a clear story. Here in this case, I would say even it doesn't matter. It still looks Bitcoin is bottoming. And we had the non-confirmation in April that the 200-day cycle is not ready. Yeah, but Bob, your comment is very important. So you said, careful, we get a bear market rally here, but we will see lower going to end of year. Use more historical data, and you see the bottom has been in early 2014. 2018 and now 2020. Yes, so thanks for your comment. We should also, or we need to put this into a longer term context. So I would also recommend do a weekly analysis on Bitcoin, the weekly cycles, which I will not do now because we are running already 45 minutes here. But Bob, you're absolutely right. We need to set this daily analysis into context of a longer term analysis. Sergey, you are remembering the count I did on the long-term historical analysis. That's correct. So we need to revisit this pattern. So thanks for bringing this up. But this would be another in-depth analysis, and I'm not sure if everyone is remembering this pattern. But I would recommend everyone, please review the long-term analysis I did on Bitcoin here. The videos are still there. And there's also a longer-term pattern which repeats for this 200-day cycle. Yeah, so that's what I promised, at least in the beginning, that we have a review of the dollar index, long-term daily, and the Bitcoin index. And I see that there are also requests on other data sets, but in regards to the lengths, I would please respect that I don't want to overrun over an hour here. So what I will take for the next session is that gold cycles are of your interest. I think gold. So these have been, if I just review your comments. yeah, it was requested. So please, if you're interested in gold, I promise, and I will keep to that, next week, Monday, we will do a live analysis on gold commodities. We will also put the silver then into the mix to see where the assets, gold and silver cycles are. It would take too long to take this now. Please excuse not doing this today, but at least I will take it for next week. So let's take the next 5 to 10 minutes to go over your questions. Or I will quickly have a look at the chat section even more. What okay, I think I think there. Important question. So in regards to membership, please just write us an email. I will forward this to our support. For sure, you can cancel subscribe more or less at any time. We have no problems with that. So just reach out to our support via email, and we will solve that issue for you. No problem with that. Okay, so I think as there are no questions related to the dollar index and Bitcoin, I'm happy if you want to stay for 5 to 10 minutes, just at least get a teaser on gold. Yeah, that's. I mean, I thank you for being live here with me. So therefore, I need to take your points very serious. So let's quickly switch to gold. Just 5 to 10 minutes, not in depth, but at least as you requested. That's the daily data on gold. I will just pull this up in our cycle analyzer here, and now we will do the same procedure here as standard. It loads the 850 bars, so this is the starting point for every cycle analysis. Let's have a first look at the spectrum where the peaks are. The first observation from just quickly scanning this data set, which is interesting, we don't have any green peak in the spectrum. So that's what pops into my eyes here, which means if we don't have a green peak, we don't have a cycle with good statistical significance in the data set. So this is one cross-check we use to just verify if we should use a cycle for projections or not. Of course, Bartle's values with above 70 are just from the test of statistical significance. Should be used or could be used, but we don't have any green peak here. So in the first one, I would like to see green peaks here or green triangles, which we don't have, but okay, that's just the first point. Then the second important point here is I would always start with the longest dominant cycle, which is standing out in the spectrum, which is the cycle with a length of 213 days here. So that's the first cycle I want to go. You can see this also here on the right-hand side. Let's have a quick view on that. So what this cycle analysis, interesting here, if you have a look at the Bartle score, the values are very low here, 14, 16, 10. So you can invalidate these cycles here because the Bartle score is much too low here. I would never use these cycles for any forecasting here. So just from this Bartle score, and then the second score is then strength here. That's the reason why here we have the cycle with the length of 213. This was also the cycle in the spectrum, which is not the highest, but a high or an acceptable Bartle score here. The next cycle would be maybe, from Bartle's perspective, 84, but this cycle is from the strength very low and even the amplitude, so it will also not play an important role here. So that's the way how to pick the cycle here, just to explain the procedure. So let's go with the 214 here. Yeah, I think this at least suggests we have peaked April or already in March, April. So this period here looks like the topping period, and the cycle's now rolled over. So, but before we have a closer look, we also need to cross-check what I always said, past behavior here, to learn a little bit from past behavior. So therefore here the low, the top, then, and again, that's important here. We had the negative period, and during this time here, we very volatile. So interesting here is this here, this really pulled the price down into the projected low here, which in turn then resulted overall, this was more or less a sideways moves here into this area. And then the next upswing was very strong to the upside to the given point here. Then we had the downswing into somewhere here. And here again, the price was pulled then here in this, upswing period. Yeah, so we are running over time. To this point here, then sideways again here during this period. So here this cycle was skipped more or less. Yeah, so the downswing and the upswing. So, I mean, that's also what we have seen in the statistical score. I think what I tried to highlight from a statistical perspective, we don't have much confirmation that this cycle length here is statistically valid, and that's what I just draw over the chart now with the lines. You've seen that sometimes phases have been skipped, sometimes it was spot on. So therefore, we just have an average Bartle score, and from a digital signal processing, it's detected this cycle here, but at least statistical significance is too low, at least to follow just this analysis. I mean, we could put this analysis into context now of a longer term analysis, and we need to put silver into the mix. We need to use the weekly cycles. We need to analyze more historical data. This is required now if you see this kind of analysis in gold. And therefore I want to, or please accept, let's stop here for gold. I mean, that's the first view that in this asset, it's right now not as easy just to derive or detect one simple cycle. I hope I explained why, and I will promise to dig deeper into gold and silver cycles with the weekly and more historical data then starting back again next week, Monday. All right. So, thanks for joining me today again. As always, this is more or less, it's not scripted in detail. I just want to do this a live analysis with you. So therefore, thanks for being live here and putting your questions on the table. That's what I like. And that's what this session for. I hope you learned something. Please like, subscribe, tell your friends. We do cycle education, and I hope to see you next week. Same time, same place. Stay safe. Have a nice week. Thanks and bye.